are live. No, not live, but unedited. And that's as close as I'm going to get for now to doing a live podcast. I'm thinking about maybe streaming could be fun with so what happens with that. All right. JNK on ARCA, and that is SPDR BBG Bark High Yield BND. Wow. Okay. What the hell is that? Should I know? Does it matter? All I know is I have my Stan Weinstein setup. There's a nice look at these stages. Stage 2, stage 3, stage 4, stage 1 right here, stage 2, stage 3, stage 4. Wow, nice. Stage 4 right there. And you had a couple of trend lines. You had this trend line, but trend lines are above the 30-week moving average. Kind of useless in a stand system because you'd exit anyways on the 30-week moving average violation or close to. But after a while, you had stage 4 starting to accelerate. 1, 2, 3, 4, and you would have exited all the way here. You have some more aggressive trend lines. You're always allowed to draw more trend lines as they develop. 1, 2, 3, 4. You could have even exited here. So this is what it would look like on the trend line exits. Let's say you shorted this, you're in, and you had your first trend line. 1, 2, 3, maybe this one. Let's see if there was a closer one. 1, 2, 3, 4. Yeah, you could have exited right here, half your position. And you see, this is one of the rare occasions where it doesn't really go in the sideways move that much. Is it the trend line that was misdrawn? 1, 2. No, it looks pretty good. So there's an exit there. But it's no biggie. You could always continue back on continuation and breakdowns. So right here, this candle right here. This one here, you could have decided to go in below the resistance line, the support, below 30-week moving average, getting closer towards the 30-week moving average. There's no Ichimoku cloud, green cloud here, and the support's starting to pick up. And what's healthy about this in a downtrend is the green candles have less volume than the red. So that's healthy. See, price action goes down on these candles. Oh, this one, strong green candle, not super duper, but after that, the volume starts contracting and then starts increasing again on these two candles going down. Contracting volume on the green candle and increasing volume on the continuation breakdown. See how the pullback, healthy pullback, breakdown strong volume, contract, and then exploding volume again, going down. This is classical stand. On pullbacks, you want light volume, and on the push in your direction, you want strong volume. That means it's healthy and always gives you an opportunity to get in on the pullback. So right there would have been triggered out, and then you could have re-entered here for more positions, add-on positions. Time moves on. Now this trend line, after it's been validated, it becomes this one. 1, 2, 3, and that's the line that I had going all the way down. And right here, you would have drawn it. Okay, let's go back. Let's just remove a few candles. And you have this trend line, and then if you have a chance to draw even more aggressive one, go for it. 1, 2, 3, 4 points. So this one we're not going to use anymore because that's the valid one right now. And there you go. On this candle, you would have exited right there. And that was close to the bottom, very close. Wow, that's just awesome. And off it went back into a stage 1 breakout. Above right here. You see here, you could have said it's almost a Stan Weinstein breakout right here on this candle. Looks like an A plus setup if you would be Stan Weinstein. Twice the average volume for the previous 4 weeks. Breakout candle above a breakout line, above the 30-week moving average. Let me just turn off the cloud. Okay, this is Stan. He didn't use clouds. So this would be, you'd be right here, Stan. It looks like a perfect base. And you had the, that's not the super duper one. RSI going over the halfway point. It's already over the halfway point, starting at the halfway point, going upwards. And ADX is, this is a Stan setup. The triple confirmations right there. So it's all good, but Stan always says he prefers breakouts where there's no close support. But if you just see it like that, you might lie to yourself and say, the support's farther away, or it's not that important. And I haven't been playing in a while, so all the support here, this resistance, I keep inverting those terms. And it's kind of critical that I don't. And all this resistance right here, it could slow down the move. And that's where the Ichimoku cloud comes in. And if the price action is below the red cloud, you're in a downtrend, because that's resistance. But right now, you're right in the resistance. Like the real breakout would be right now at the stage. You need a close above 36.50 instead of where you are now. So what happened? Oh, never quite did it. Maybe one of these candles right here. Maybe this candle. Not quite twice the average volume. The RSI is already in, it's not going halfway. This is where you want it, right here. Like going right after that, over the halfway point. You really get that momentum. Well, that's why you don't remember, like, you could have pulled the trigger on any of the occasions. The trick is get that triple confirmation or quadruple confirmation to minimize the whipsaws. And if ever you still get those A++ setups, at least you'll be, and you get whipsawed, it's okay. You have your risk and money management, but you just want to avoid losing those 1% of those NAVs. You really want to filter those out. And it's really going to show at the end of the day if you can eliminate those. Let's just see if the monthly candle would have prevented us from entering on that. Because that's the final confirmation, is go see the upper trend. And if in your harmony with the monthly candle. Okay, let's remove all lines. Right here, this is the breakout line. So if there's a close above 36.50 on the monthly candle chart, this is how I do it on my classical monthly candle reduced noise framework. Draw those trend lines on opens and closes, and the measured move is that. All this is just noise. It's weekly noise, daily noise. The close is when it's important, and the monthly candle decided to close at these levels and ignored that daily fluctuation, that daily noise right there. All right, so let's see if we would have had a close above. Yes. Well, yeah, we did. Not convincing above, not really above. We could have said, maybe I want a round number. I like it if it would have went a little higher here. But if you really want to get in, that's super tight. I think Stan, there's a provision for you need to, the breakout line, you have to break above it, but not like by pennies, right? You need maybe 1 or 3% above. So this is not super duper, but you could have still called the shot. Technically, it's a close above. It went down, and then you would have... let's see if you would have lost your 1%. Let's go back to the Stan Weinstein. 5 years, weekly candles. And eventually, yeah, you would have... price action went back down. Got triggered out. So this is where it gets me today. Let's remove again all the trend lines. Right now, we seem to have been in awesome stage 3. And let me just get back that ADX in the picture. Remove these lines. I just keep the ADX 27. And this is why I'm looking to get the ADX as a scanner, and that's why it's right there. Stan wasn't using it. I'm just looking, and I'm not using it to base my entries or not, but I'm just seeing if it coincides with any value under 20 for a prolonged time should correspond to a stage 1 or 3. And that means that the stock is not trending. And when it starts going up, that means we're in a stage, either stage 2 or stage 4. So right now, this could have been a good screener. Hey, look, I have this stock that's been under 20 for a certain period of time. And then I could look at the chart. Oh, yeah. And then I would have just set. It's right here. Right here, I'm under 20. And then I look at the chart. Wow, look at that. Beautiful stage 3, which could continue into a stage 4 or breakdown. You just put your alerts and just wait. You wait. Okay. So here we are today. And I believe this is definite stage 4. Right now, you're not going to play the break because you're still in the cloud. But any close below 36, that round number, and oh, look at that volume picking up. It's going halfway territory. Whew. This would have been very tempting right now to enter. If you didn't have the Ichimoku clouds, I'd say this was an A++ setup. And right here. Bam. Okay. So this is the breakdown right there, the breakdown candle. For me, that's it right there. On that day, I could have went to see the monthly candle chart to see if I have that A++ plus setup. And on the monthly candle chart, here is here's top formation. So it was still risky because the close was, oh man, so tight. Yeah, this tight top formation right here. It broke down. You could have said, okay, I'm on the good side of the trend. And there's some support a little lower right here, which might slow down the action. So you could have entered based on that top tight formation. Check it out. Let's make it less tight. There you go. Here's the range. I'm looking for opens and closes where I could draw my line. I'm ignoring the wicks in my head. That's just the noise below the breakdown line. So this candle actually is a breakdown candle on the monthly candle chart. And on the monthly candle chart or just in classical charting, tight formations like that moved 8 to 10% or less, The target is 3 times the measured move. Bam, 2 and 3. So that's just a classical charting measured move for that monthly setup. So we know it might slow down here, but and it did. See, the candle went down and then back up, but it kept continuing. So it's still a confirmation for the, because we didn't have those candles at the end, right? And here we are today. There's a pullback on a diminishing volume, and here we are. All right, what am I going to do with this now? With Stan, you get to play on the pullback if it's on light volume, and you buy right there. So let's say the price breaks down, and then you have contracting volume on the pullback. You could have entered here close towards the breakdown line. If you don't get in there and the price action starts going back down, then you're going to play it as a continuation breakout. So that means you have to wait till you have to re-identify what's the next the support, and a breakdown below it. That's when you enter. Right now here there would have been a false signal. You could have entered. The price went back in, but right now, if I want to play continuation play, I need a close below. There's lots of noise here. Below 35.64, and I'd say probably 35.50. If you could get a candle that could explode right here and close under the 35.50, then you could continue the stage 4, be a good entry. You could enter here. Maybe it's just going to go sideways for a little while. That's why you want a pattern, launching pattern, to give you momentum to continue the stage 4. Like most of Stan's examples for continuation breakouts or breakdowns, the pattern is closer to the 30-week moving average. So this could be a guess that it could probably move sideways a little bit before continuing down. So I don't like them too much. I know this in a stage 4, but if you want to time an entry and not get whipsawed out, I would wait for a solid break below 35.50 to get in. And if it doesn't do that, it might just go sideways and bounce back up and get closer to that 30-week moving average. But this is a definite top formation right there. You have 30-week moving average that's turning over. We're under support. There's no reason for this not to go down. It's just a question of choosing the correct entry. All right, cool. All right, J and K. I got my alerts at the 35. I'm gonna put it up, 35.50. I'm gonna put a little higher just to get back in, see how it looks like for next week. And I have the other case for the upwards move, just in case it decides to go back up. It's just very possible. Then I get another alert at 36.25. All right. See you soon, Mr. Stage 4 Continuation Breakdown. Ciao.